In this video, guys, let's look at a simple yet effective day trading system. Stay tuned. All right, traders, warm welcome to you. All right, so give me 5 minutes, maybe 8, sometimes I overrun. You know me, if you've watched me before, kind of try to get to the point as quick as I can. This is a simple yet effective day trading system. Now, disclaimer, not suggesting you trade this way, blah, 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 usual risks, etc. Don't take my advice, etc., all that kind of stuff. However, this is something that you can use, I think, as a broad approach. It's a good way to, it's very simple and I think it's effective on its own. It works best when you're integrating with other types of trades and other approaches as well. But let me kind of explain it to you and you can kind of go, yeah, you know what, that sounds great, Mark, I might use it, or nah, not interested, I'm going to carry on what I'm doing. Fine. So, what do we need? 2 things, ATR and support and resistance levels. Told you it's simple. ATR, I like to use a 10 periods. This is a daily chart, by the way, we're looking at. Daily ATR, should I say. 10 period ATR is basically saying what's the average true range, or what's the range likely over a 10 period. Now, with ATR, it takes into account gaps. So this is more something for the indices or for the currency guys. Stocks, the ATR is going to get a bit screwed because of the gaps, the way it works. If you are trading a specific stock, then maybe take the absolute range of each day and do the average of 10 and try and strip out the gaps. You can do that. But no, it's going to get complicated if you're trading other instruments. Fine. So we're kind of working out the average range of the day, basically over a 10-day period. And we're going to understand how to draw support and resistance levels. Now, I want major ones. Don't want minor ones, I want major ones. So good, decent support and resistance levels where the price has stagnated and stalled multiple times, or it's double bottom, triple bottomed, you know, just not gone any lower. Now, my preferred approach when drawing on support and resistance lines is to kind of have a zone. So yes, you know, maybe I'll draw a line on my chart, but I'm not saying, well, if it goes under it, that's breached, because the markets never, well, won't just do, sometimes they do, of course, but generally markets will go in a kind of zone and go, okay, well, maybe it'll breach it a little bit and struggle and then come back. You know, gone are the days where, I think anyway, where, you know, you used to have a big, thick order sit in the order book and price would just not go through it. You know, algos and stuff and all the other advent of technology means that, hey, if someone wants to buy at $50, they're not just going to stick themselves at $50. They'll have an algorithm that says, well, if I can get it at, you know, 49.48 or 49.97, I'll pay that rather than 50. And so they'll work the order and then they'll pay up to 50 and they'll come back. And so that's when we see this kind of sometimes little wicks through slightly on the support and resistance levels. Anyway, I'm digressing. The point is, draw your support and resistance levels lines. You want to check out support and resistance, guys, drawing it, my thoughts on that. I've done another video exclusively on that topic. Right, so what you're doing now is as the day opens, so it's a day trading strategy, ding, bell goes. If you're a currency trader, whatever session you're trading, you've got some sort of idea that, hey, in that session, this is the range, or 24-hour session, whatever, your kind of start of the day for you. Let's use Dow as an example, or DAX, or one of the indices. Let's say Dow. You say, right, the ATR is 100. So the cash session Dow, at the opening bell, 2:30 UK time for me, I think 9:30 Eastern time, I think for a second then, guys in New York, that's when the open is. Right, now I'm expecting, this is where we come into expectations, a range of 100 points. Quite low on the Dow at the moment, that's not right, but hey, let's use an example. That's when ATR comes in. So what does that mean? It basically means that by the end of the day, the high minus the low should be around 100. Now, of course, days are going to be different. You're going to have extreme days, less volatile days, higher volatility, but you're taking what is a normal type of day. Now, let me digress slightly and come back to this point. This is where you can add filters like, I don't want to trade on a Fed day. I don't want to trade when we're in fresh highs. I don't want to trade when we've got a catalyst. I don't want to trade where there's an unlikely or an unusual type of day, a big overnight range, the prior, or bigger European range, or something where you might get a breakout and a fresh territory and kind of new ground covered. You want it to be the most normal day possible, because that's what we're trading. The average true range, I want it to be an average day. You want the range to be 100, fine. So what you're doing now is you're framing the 100-point range at the open. And this is a dynamic game you're playing. So what you're doing, you're saying, right, here I have 50 points up here. There's 50 points, plus 50, and here's minus 50, right? So plus 50 and minus 50, giving me a 100-point range. Now you're assuming at the open anyway that the open will be the midpoint. But of course, it doesn't work like that. So what you have to do is that's at the open, but as the market starts to trade around, you go, okay, well, if that is the high, I'm going to move that to the high. So it actually happens to be the high here. So as soon as that high has come in, let's use this one then. This high comes in, all of a sudden you say, right, there's my high. Let me bracket 100 points. It's down here. And then you start to trade which are the key support resistance levels that are at the extremes of those moves. Now you've got to use some judgment here, and you might say, okay, well, do you know what? I want to see a low put in, for example. So you've got to have a theme. So let's walk with the theme. I want to see a low put in. I'm going to use that as my anchor point for the low of my range. So if we imagine now, so after the open, that's why you frame it. You wait for a good low to be put in. Bang, you see that an hour after the open and a rally off. You go, right, that I think is the low of the day. So you then put the bottom of your range in. You extrapolate out 100 points up. And there's your 100 points, and that's come from our average true range of 10. And then you go, hey, what key support and resistance levels fit in the upper 10% or 25% or either side? Let's say if we're using 100 points, 10 points either side, so 20-point thick range. What falls in between 90 points and 110? In other words, this kind of area here. So if you had that zone there, right, that's 100 points from here to here, the midpoint of that, 10 points either side of it. And again, you can be flexible with this, you can play around with this. What support resistance zones from the prior days, whatever chart, looking at a 50-minute chart or something, fall into that? Because you don't know where this is going to be. This could be really, really low, in which case it kind of, the whole game changes a bit. But if you feel like it's put a low in, or you feel like it's put a high in, there's your new anchor point. And then you start to draw your support and resistance levels. And it may well be, hey, actually, you know what? There was a really key resistance level from way back here that goes along here. It's not quite there. Oh, okay, well, it's close enough to be aligned with what I'm expecting the maximum range to be, and it's combining the confluence of the resistance level, so that might be a place to initiate a trade as it comes back through it. So the perfect scenario is that you have a resistance level that sits right in the sweet spot of where you expect the range to be. You expect the range to be 100 points. You anchor the lower part of the range at the low, where you perceive the low to be the morning low. Often we get a morning low or a morning high. There's your low of the day. I'm expecting the market to be 100 points range. There's the high. And that's okay on its own, but we're adding an extra little twist to it, adding a little bit of confluence with it and saying, okay, well, if you've got a key level as well that lies within that top chunk, 20 points, 10 points either side, then I've got even more reason to take the trade and even more reason to wait for that as a place to initiate a trade. Or if you're long, a good place to consider taking profits. So simple yet effective day trading system. I hope it's simple. I hope I've explained it, guys, in a way that makes some sense. But really, ultimately, what we're doing is, what's the expected range of the day? Then we're moving that based on the price action, highs or lows, and anchoring the low of that, high of that. And of course, the range isn't going to change, but the actual price level is. Once we have that, we've decided that's the low of the day or the high of the day. Where could it go to based on what I'm expecting the average range to be? Great, it's there. So that's our place to initiate a counter trend move back. So we're not expecting to go much further, but we want the added confluence of that matching with a decent resistance level or support to the downside. That is a good way of structuring the day. It keeps you out of nonsense, keeps you out of chop. It keeps you from getting involved with a trade until at least you're at a point where there's a good chance of it rotating. Of course, there's going to be times when it just blasts through, so you've got to have a risk management strategy in place. You've got to try to keep out of those trending type environments, but it's not a bad way of getting better at understanding the rhythm of the market, the ebbs and flows, how the expected range correlates to what you're seeing during the day, how those key levels can line up with some of that very often as well. It's something to explore. I find a lot of value from it, and hopefully you guys will too. Take care, see you next one, bye-bye.